Hey, what's up guys, John here. The FDIC just issued a red alert to America about $7.7 to $8 trillion in unsecured deposits and what could possibly happen with all of this money. Now, most people believe that the FDIC has my back. I'm insured up to $250,000. Well, the reality is the FDIC only has $128.2 billion in their entire fund. $128 billion, meaning there's going to be about, $7.9 $8 trillion that are not going to be backed. And so when you start to pay attention to what's happening right now in the economy, you'll realize that banks, they're in a world of problems. Remember last year, about 12, 18 months ago, FDIC had a video, it was leaked allegedly, that they said,
it's important that people understand they can be bailed in, but you don't want a huge run on the institution, but they're going to be.
We walk into a big problem, there's going to be bank runs and then there's going to be bail-ins where they're going to essentially bail themselves out of crisis with consumer deposits. This is not my words, this is theirs. This is in their video.
I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank?
Now, look at what's happening. Commercial real estate values are crashing in many cities all throughout America.
If interest rates do remain elevated and property values do not recover, default rates could reach levels comparable or even surpassing those seen during the Great Recession.
Dallas, Houston, you look at San Francisco, Los Angeles, Chicago, Atlanta, Philly, you're seeing markdowns at 50, 60, 70% of what they were trading for years ago. Look at what's happening with auto loan delinquencies, credit card defaults. You look at, consumer loans. You look at bankruptcies, corporate bankruptcies. They're all signaling that America's walking into a wave of problems. Now in this video, I'm going to show you exactly what's going on to help you and position you for what I believe is going to be the biggest wealth transfer in American history. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's really going on in our economy. And if you'd like to fix your credit to position yourself for funding, we'd love to help you at my company, greatcreditfast.com. That's greatcreditfast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to greatcreditfast.com, click the link in the description just below this video, schedule a free call for tomorrow, and check out our reviews on Trustpilot. Take a look at this. So FDIC wants a closer look at $8 trillion in uninsured deposits. Came out just a couple days ago. The failure of Silicon Valley Bank and other bouts of financial instability have called attention to these deposits and possible changes on how they're held at banks. Now, what they're not telling you is that Silicon Valley Bank, First Republic, and PacWest, getting acquired by Bank of California in March of last year, brought forward something called a bank term funding program. It's a little $165 billion nest egg in which they lent out funds to 1,804 banks. These banks, they needed a lifeline. They say, hey, look, we got a lot of these assets, commercial real estate, different assets that are marked down 40, 50% from what they were a few years ago. But the FDIC program, this program came out saying, look, we'll give you a loan based on 100% of the true value of our value of what you lent it on back then. Don't worry about it. You might have paper losses of 50%, but you don't have to realize them right now. We'll just give you the money. And these banks said, oh, great, this is awesome. Perfect, thank you very much. But it's only for a one-year loan. It's just a one-year loan. And that program expired March 11th of this year. And it all expires March 10th of next year. And so 1,804 banks have to go write a check for the entire amount, meaning you start to look at what happened to commercial real estate the last 6 months, it's only a downhill spiral for a lot of these assets, meaning it's going to be harder for these banks to be able to pay back that money, meaning these banks are going to be in big trouble. And I believe we're walking into crisis with banks. FDIC reports reveals alarming $7.7 trillion in uninsured U.S. deposits. Now, uninsured deposits, not broker deposits, led to the 2023 bank failures. This is a couple days ago from AmericanBanker.com, right? A couple days ago. Now, when they say they have $128 billion, and Jerome Powell says, he warns that commercial real estate woes will lead to bank failures, this problem that we'll be working on for years, he's not lying. You look at the CEO of Starwood Capital, he issued a warning saying that we're going to be seeing tons and tons of small banks start to cave. The story is well known. It is banal. With the rise of remote work, commercial tenants left their less desirable buildings whose values sunk often below the balance of the mortgages. And so what he ends up saying here is that they're going to be failing within, he said specifically, every day or every week. Barry, Starwood Capital Group predicted a regional bank failure every day or every week, right? And talking about commercial real estate, talking about all the problems these banks are facing right now. And this isn't some guy, some quote unquote economist or someone. He's one of the biggest real estate holders in America saying this, right? One of the biggest real estate holders in America saying this. PIMCO warns of more regional bank failures on property pain. Banks selling quality assets first to avoid big losses. PIMCO has amassed property portfolios for 18 months. Now, you start to pay attention to what's unfolding with these regional banks. They're holding 70%. They're holding $1.6 trillion worth of these commercial loans, most of which are probably underwater, right? 70% of a $2 trillion market, right? 1.6 trillion. You look at where Americans are. Americans are saving less these days, and here's why and what that means. Now, the national savings rate's at 3.4% compared to 3.5% last month and 4.8% last year. So you just look at the numbers. Consumers have less money, so less cushion for banks, and the money in which they had, they use to take on loans. And a lot of these loans they're unable to pay back. It's going to be a major consolidation inside of the banking industry. But the big question is, are deposits safe? Is our money safe? I personally look out at the world, I don't think anything is stable. The last 4 years, what has been stable? What has been tried and true? Everything has changed radically. And to say that we're not going to see massive change in front of us, I believe would be naive. I'm not saying that we're going to see a scenario where we're going to see all the banks take everybody's money. I'm not saying that. But I'm saying that we're going to likely see a lot of banks go down, and I'm not sure which ones will make it, which ones won't make it, who will get the money back and who won't get their money back in that event. Now, when you start looking at the job market, Intel laid off 15,000 workers, right? You had Tesla laying off 10% of their, another 10% of their 140,000 total workers, right? Another 14,000 jobs. You have all these companies issuing massive, massive layoffs, right? You look at what's happening this Saturday with the real estate industry. The real estate industry, with that National Association of Realtors lawsuit, why all this ties in together, is as people start losing their jobs, they start defaulting more on bills. They start tapping into savings more and more and more. This real estate lawsuit, they have 45% of real estate agents claiming that they're struggling to pay the rent. That was December. The economy was better in December than it is now. You look at 6% commission on buying or selling a home is gone after real estate association agrees to seismic settlement. In January they said there's 1.554 million realtors. Now they're saying there's 1.4 million realtors just 4 months later. It's 3 months later. You start to look at all these industries connected to the real estate transaction. Real estate brokers, property management, real estate appraiser, real estate investors, inspectors, lenders, mortgage brokers, commercial real estate, lawyers, land. Also add in escrow, title, landscapers that, get referrals from buyer's agents. You start looking at the web of jobs connected to a real estate transaction. You start to look at what's happening across the entire job market. It's a period of major disruption. Now, what I find fascinating is 40% of all mortgages in America were taken out between 2020 and 2021 at the height of the market, absolute height of the market, record low interest rates, 3%, 30-year fixed, credit scores didn't matter. It was a free-for-all, right? Now, as the market's changed, it's harder to sell properties. And after sitting on the sidelines for months, sellers finally want to offload their houses, but no one is buying. Existing home sales tumbled to the lowest level since 1995. If a mortgage volume, U.S. home buying demand worse since 1995, you start looking at all this, what is this going to mean? Roughly $30 billion could be slashed from real estate agents' commissions. It's going to mean a ripple effect throughout the housing market, throughout tech jobs, throughout commercial real estate, throughout every industry. And when you have $7.7 to $8 trillion in uninsured deposits held by these banks, the real question is what's safe and what's not safe, right? What is really safe and what's not safe? When the average down payment is for a first-time buyer is 6%, do you think a first-time buyer is going to want to give up nearly half of their down payment to go, have a buyer's agent represent them? Probably not, right? This is happening Saturday. So all these industries are walking into major change, literally every single industry. And banks are holding the bag on all of it. What do you think about this situation? Do you think we're going to walk into a scenario as we start to see defaults skyrocket? Now, I believe the next 6 months, we're going to continue to see a lot of craziness, a lot of insanity, and a lot of change. Look at the world we live in today. every single day there's another breaking story, another major story. 2 days ago or 3 days ago, people would forget about that breaking story. Over the next 6 months, I can almost promise you, we are going to be hit with more and more and more stories, more events, more job losses, more disruption, and more chaos, all of which will be bad for banks. And I think we're just going to see a major period of consolidation next 12 to 24 months across the entire banking sector. I think it's wise for people to protect themselves and kind of get ready for it, because I think that without doubt, what we once viewed safe will no longer be safe going forward. If you'd like to fix your credit, we'd love to help you at my company, greatcreditfast.com. That's greatcreditfast.com. And I'd love to hear from you down in the comments section below. Let me know your thoughts on this. Do you think we're going to see a situation where we're going to see bank bail-ins? I mean, the Dodd-Frank Act, that was signed in. They can legally do it. They can legally do it. Many people think that, oh, that won't happen. It's not possible. They can't. Look, when you deposit your money with the bank, you no longer own the money. The bank owns the money. If they need to bail themselves out of a problem, they likely will. I mean, this is what's written into law. Let's have a conversation below, and I'll catch you next video.